I want to bring in Darcy Stacom. She's the Vice Chairman and Head of Investment Properties Group for CB Richard Ellis. Darcy has done major brokerage deals here, including the GM building, Stuyvesant Town, and as well as the recent Google building at 111 8th Avenue. You represented Google in that transaction.
Yes.
So, Darcy, when you hear somebody like Slim and others who are saying we're going to come into this market now because of the low interest rates, are they going to make a killing here?
I think that they can do extremely well. There's not a lot of product for sale. Most people that own real estate want to keep it. So it's an interesting environment.
Why isn't there a lot of product for sale?
Because if you think about where would you go use your money, you're going to go put it in the bank and earn a quarter of a point. You're going to go put it into a stock market that's already almost doubled from the bottom. I think that there's a lot of concern over where you would go and take and make great investment returns.
So there's no incentive.
There's not a lot of incentives to sell, no.
Okay, so what's going to get it moving then?
I think recapitalizations are the coming trend, where people will sell 10, 20, 50% of their transaction, and they'll take the profits that they can from having a long-term hold, and they'll let somebody new come into the transaction.
Okay, but that is pricing in then a recovery in this market, right?
Yes.
Okay.
And there's been a recovery in this market, no question about it. When you have positives like the universities investing billions, health and biomedical coming in, and Google and Bloomberg and others growing, you've got a powerful market.
Darcy, I think I've heard you say this before, that when you're walking down the streets in Manhattan, you see indicators everywhere, right? So as you're walking around Manhattan now, what are the indicators that tell you that this recovery is actually for real?
I think it's interesting when you turn onto Fifth Avenue and suddenly you have the major crowds again. When you go down 9th Avenue and you have substantial crowds as well for the restaurants. If you talk to a cab driver, they'll tell you it's still a little lumpy, but in general, they're doing better. Talk to the hoteliers, they're full. So those are all great indicators of a recovery.
Right, and last month we had this property series where we talked to a lot of commercial property developers, Mort Zuckerman, Tony Malkin, and others, and all of them said to us, yes, there's a recovery in place. They see prices coming back almost upway to halfway from where they had fallen during the recession. Is that what you're seeing as well?
I think, unfortunately for them, they're recovered to about 25% of the fall-off, maybe a third. So I think they're all hoping it's a little bit lower so that they can get better buys. But we've actually seen a very strong recovery. Rents are growing. You just had a competition between two tenants to get 120 Park. Bloomberg won. Google buying their headquarters because they plan on expanding so dramatically. So we're really in a good, strong period of rent recovery.
Does that mean that premiums are rising then for the prices that are being paid?
Yes, they are. Definitely.
Okay.
We're seeing as low as a 3 cap on a trophy.
Would you apply that to then what happened with the Google transaction and buying 111 8th Avenue?
I think actually Google got a great buy because they got a good return and they got built-in inherent growth for their company, which in a type of location that works for them. And they're a tough they have a high standard for their employment and they want to deliver a great quality of building for their employees.
Well, when they came to you, what were they looking for?
They already in that building, and so I think that they were just looking to secure and govern their own future.
You mean that they were already renting in that building,
yes.
right? Okay, so then they were looking to just buy, essentially.
Right. We've had a lot of tenant building and buying over the last 15 years in Manhattan, which tells you what they all think about the future of Manhattan.
Right, that it's growing, essentially.
Right.
But I'm curious about Google itself, though. The fact that they wanted to secure their future. What does that indicate to you? Is that any type of turning point at all for this New York market?
Well, I think in that they are admitting that they're going to be adding a huge number of employees, and when you think about the quality of employee that they look for, and therefore their spouse, their partner, whoever comes with them, and what that does for the New York market, whether it be residential or commercial, is really quite extraordinary. And it's going to drive sales tax revenues. It's all good for New York.
Darcy, what happens when interest rates start rising?
Well, they've already started, and I think we're starting to feel it a little bit in terms of what you can get when you go out and to get a mortgage, and mortgages were recovering really quite strongly, which is also important for Manhattan because you need those mortgage tax revenues.
Right.
But I think we will see some slight pullback, but because there's not a lot of product for sale, I think it's going to be a neutralizing effect.
A neutral, okay. So essentially, it would only be a detriment, and once we get this market moving again.
If we had a lot for sale, it would be a detriment.
All right. So we're going to wait until obviously that inventory starts moving around then. All right, Darcy, thank you.
You're welcome.
Really appreciate it. Darcy Stacom of CB Richard Ellis.